Hello and welcome back to the ROI podcast, the Return on Investment Club. I have a very special guest today with the headphones. He looks like he could work for the CIA. I don't think he does, but if he does, he'll probably have to kill me. Actionable Intelligence Alert. He is an intelligent man, and make sure that you subscribe to his Substack. The link will be in the description. My guest today is John Polomny. We are going to talk about some actionable ideas with some actionable intelligence. John, welcome to the channel. Thank you for joining me. I've been following your work for some time, and it's a pleasure to have you on.
I appreciate you having me. And that was, I like the intro. That was cool.
Sometimes they go well and sometimes they don't. I thought we might start today in a pretty standard format, a macro going down into a meso, into a micro environment. I've got some key themes that I'm keeping my eye on over the coming year, 2025. And I'd like to get your take, and I'd like to get your take on some of the themes that you're watching. We were conversing before we started recording about the opportunity in Latin America in general, particularly in Colombian stocks, which have seen better days, as the saying goes. With the elections due for end of 2026, Gustavo Petro has lost basically every municipal election except for Antioquia. How do you see that playing out, and where do you see the opportunity in that theme, and how are you expressing it?
So, first, thanks for having me on here. Yeah, I mean, this is one of my main themes that I've been kind of involved with just based on what's happening in Argentina, right? Um, and I think I was early to that. I've done very well there. Um, Latin America, uh, it seems not just in Latin America, it just seems that we are going through a worldwide, a move away from the whatever seems to be the incumbent governments around the world are being replaced because they're quite simply not meeting the needs of their populace, and that's especially true in some of the countries in Latin America. I mean, Latin America, I think, has a tremendous endowment of people and resources, obviously country by country. I mean, you can look at Chile, Peru. I mean, you can look at Argentina now. I mean, they probably have this developing shale play. But Colombia is very interesting. You mentioned the current regime there. I think what happens with Latin America, especially like a country like Colombia, it suffers from a perception deficit or arbitrage opportunity. People perceive it a certain way. I mean, all the news there is in Spanish. If you don't know Spanish, you may not be able to follow the news, and so people assume, well, this Petro guy got in whenever he's a communist, blah blah blah, and therefore I don't want anything to do with Colombian stocks. It's why would I want to do that? But I think that, to your point, this is where the opportunity comes. You have this perception that may not actually reflect reality. I don't think it does. I know folks down there. I talk to them regularly. I mean, it's not nowhere in Latin America. This is the problem when you're looking at from Western news sources. You're going to get a certain bias, and so you're just going to swear it off, or you're going to put it in the too hard pile or something like that. And not only that, I think a lot of Americans, a lot of investors, Western investors, they have what I call home country bias. They don't really like to venture outside their home markets, and especially in the U.S. over the last 2 years because of the returns that they've gotten here. You know, back to back 20 plus years in the 20 plus uh, percentage points returns in the S&P. Why go somewhere else? But I think if you look at what happened in Argentina, for example, you had a country where the wheels came off, 70 years of basically running the place into the ground with status policies. Then you had this Malay come. And I think that, again, it's a turnaround situation. It was a situation that, I think the person in this case, in that case, has exceeded even anybody's wildest expectations. I mean, I'll be honest, when I started looking at Argentina, I saw in the run up that he was making, I said, oh, here's this libertarian guy, but he doesn't really have a real party. Even if he does win the first round, they're going to coalesce the status and they're going to, he's not going to make it through the second round. And if he does get in by some happenstance, there's no, he doesn't have a presence in the Congress. But I didn't understand some of the mechanisms around the powers that the president can have, emergency powers that gives him a lot of leeway. So he was able to exceed all those expectations. And I think nobody at this point can say uh, that they aren't surprised or impressed with what's happened. So that leads us to, okay, well, and stocks there have reflected that. So then that would lead people to think, well, what else is going on in Latin America? So you look at a country like Colombia, who for many years had a center right government, probably more to the right but in the center. But they had this anomaly where this fellow Petro got in there, and I think the perception changed, and it's reflected in a market that's really undervalued. And that, Druckenmiller tells us that we shouldn't look at prospects of something right now, and the market discounts things. So we should be looking out a year and a half. And to your point, that falls right into the time frame of when the election is going to come. So I think there's opportunity there, because I think that with the election of a more center right government, you can look at the candidates there. I mean, even in the parliament, things are everything, or the Congress, things are going to shift there. It's notwithstanding some miracle that this person was pulled off, but we're going to get a center right government, less statist. And I think that having, as we run up to that and people start realizing that, it's going to get priced in. So something going from, one of my themes that I like to invest in is things that are going to go from, well, I'm not going to use strong language. Let's just say from bad to less bad. Okay. And that can be a change of perception that causes a very large repricing. I mean, and I think that, you don't have to get too cute with this. I mean, there's companies that trade on NYSE that meet all the reporting standards. I'll throw one out there. It's in my dividend portfolio, but I'll throw a company out there that I like. You'd look at a company like Ecopetrol, which is the state oil company there. And, for all intents and purposes, it is a nationalized company. A very small amount of the company floats trades, but, they have large they're an upstream and downstream producer. They have electrical generation, transmission, toll roads. They got a whole bunch of stuff going on. And, they're paying a very large dividend now. I mean, somebody might argue, well, they're kind of over their skis on the payout. But, this is a stock that in normal times, and, in normal, at the current oil prices with the right government in place, I think it's trading around $8 a share now, 8.5, something like that. There's no reason why it couldn't be. It used to be a 30-something dollar stock. There's no reason why it can't get back to something like that if it gets repriced. I mean, you have a company like the Bank Colombia. It's almost a 12% dividend. I mean, if you want to do right covered calls against it, the stock barely doesn't even move. It just stays in a trading range between like 30 and 32. So, I mean, there's opportunity there, and I think it's just based on a perception change. Then you can go to like Chile. They're in the same boat. They're going to have an election there, and that I forget the guy's name, but he was the youngest president ever elected in Chile, and he hasn't had a very easy time either. And so I think that you're starting to see this around the world, these governments that aren't meeting people's needs. And if you saw what happened in the U.S., I mean, you've seen Argentina, you've seen other places. El Salvador is a success story. So people in Latin America are looking around going, hey, wait a minute. We have some of the same problems here. And our government's not really meeting our needs, but look at these other places like in El Salvador. I mean, Bukele turned that around, at least the crime, and then what's happening in Argentina. So I think, you know, um, I think that presents an opportunity. I mean, Brazil, I think, is an opportunity. It's probably a little bit more risky, I think, but there's a lot of cheap stocks there too. And I'm
Interesting.
saying this in the context. Last thing is that I think that uh, resources are going to become more expensive and more scarce over time. I'm not a Malthusian just because of underinvestment, and a lot of these countries have a tremendous natural resource endowment. I mentioned Chile or Argentina, for example. I think people discount. Part of the discussion is can Milei continue doing what he's doing? Well, look back at what happened when Margaret Thatcher came into power in the UK. It was just coincided right around the time when the UK's North Sea oil assets were ramping up, and she got a big tailwind from that. And the same thing I think is going to happen in Argentina. I think if they can get through the next parliamentary election and they can overcome, they don't screw up this currency deal that they're working on. I think you could see there's people chomping at the bit to go big in there. And you get that Vaca Muerta up to 1 million barrels a day. They become a net exporter of energy. That could be a decent tailwind also to help straighten things out. But I think that this is one of the reasons why I'm very optimistic on Latin America. Obviously, that doesn't mean there's no risk. It's riskier than T-bills without a doubt, but I think you can quantify the risk, and then you can kind of game out that if these certain events take place, you could see a definite re-rating in a lot of these places.
Yeah, absolutely. I completely agree with you. I see Argentina as the catalyst for global inspiration. I see Milei being quoted all around the world for what he has done. All the libertarians are sitting back saying, "Of course, this was going to happen. We've been telling you this for decades and decades, and nobody listened." Argentina, many of the stocks and even some ETFs are up 200, 300, 400%. So we're seeing with that Druckenmiller idea of looking out 18 months or so, and this is where, hey, in 18 months, we've got elections in Colombia and Brazil. The midterms in Colombia went badly for Petro, so it looks like he's basically going to be the next, like Trudeau was ousted. I don't think Petro will step down, but you've got monopolized businesses, Ecopetrol and Bancolombia that you mentioned. I mean, these are they're quasi. Ecopetrol is state owned. Bancolombia has a complete monopoly. Then we've got this kind of wave coming forth. We've got the dollar looking like it's about to roll over, and all the policies in the US seem to be aimed at that very end to cheapen the net present value of the debt problem that you guys have north of the border. So we have some of these themes really starting to take off. You mentioned the lack of capex in natural resources, particularly energy. And it's funny, that's the next on my list in terms of the themes that I am watching, particularly around capex cycle and supply destruction of oil. So where oil is right now, there's really no incentive production. We've got the Permian being the basis of expectations to supply the world. And there are a few problems there. The reports coming out are showing the Permian's getting more and more gassy, and the rate of growth, it's still growing, but the rate of growth is starting to inflect. How are you playing this potential slowdown in new Permian growth, onshore v offshore, which has had a terrible last 6 months or so if you're in the offshore space? Do you still like that idea, and how are you expressing that theme?
So, two ways you just kind of summed up my thinking on it. I, I mean, the problem, I think Adam Rosenzweig has stated it quite clearly. The problem in the Permian is not necessarily, some people say it's not a problem, but there's two schools of thought. I mean, one school of thought is, well, prices are low. It's had a lot of consolidation. You have bigger players now. But when I look at Chevron or Exxon or these other players out there, no, the drill baby drill days are over with. The incentives have changed for these managements. Everything has now turned back towards okay, shareholder returns. It's not like I don't get my stock options vested if I raise production 30%. Anybody can do that. You throw enough money at it, debt and equity. You saw what happened. There was a period where we had the drill baby drill era, and you had ridiculous statements in the media about, well, we're going to have this thing up to 20 million barrels a day in the US and things like that. And I thought to myself, this is insanity. And so you had a lot of private equity, free money. Remember, we had 0% interest rates for a long period of time. And I remember being, like I talked about in a recent video, being in these areas of the Eagleford or up in the Scoop play when I was doing some other energy work, and they were boom towns. It was crazy. It's not like that anymore when you drive through these places. That doesn't mean there's no activity, but it's like Adam Rosenzweig said, this is quite possibly a geological problem. You're reaching, you go back to what King Hubert at Shell Oil talked about in the 1950s. When an oil field reaches around 50% of its produced endowment, it typically plateaus and then goes into terminal decline. So I think people should go back and read. I'm a big fan of Gorian and Rosenzweig. I like the article that Adam Rosenzweig wrote last quarter for their quarterly report. What I liked about it wasn't necessarily the view that they had on the Permian, but the history lesson they gave about conventional oil production in the United States in the early 70s, that we've been here before. And the
Remarkably
Nixon
so.
administration, yeah, the Nixon administration, it's the same kind of rhetoric. We have to become independent. We're going to increase drilling, we're going to incentivize, and they threw a bunch of money and drilling rigs at it, and production didn't go up because conventional assets were in, or the endowment was in terminal decline. And so it was only because of the emergence of shale and the cornucopia of production. I mean, I'm not bagging on shale. It's been a tremendous asset, and I think it was actually squandered. I think we probably should have managed it better, but that's another argument. So we're in a situation now where the world, it's basically sucked the oxygen out of the room. The discussion, the investment. It used to be, I think when it was more fractured, there was more players. Yeah, if you get a $5 or $10 barrel increase in oil, independents will go out there and start drilling. They know where to drill, and so they go out there and get a well going because the paybacks were very quick, short cycle. So I think now that the consolidation is happening, you have people should listen to what the operators actually say. They have no intention. Why would you try to raise production if you're Chevron and thereby help crater the oil price? I mean, this is the incentives are skewed. So I think that, what that has done, what that cornucopia of production and all that, what we've seen is the big players have pretty much, with the small exceptions like Guyana, but pulled back from a lot of the longer cycle, bigger investment, five, even 2, 3, 4, 5 years ago. You're not going to walk into a boardroom and say, yeah, we have this prospect out in the Gulf of Mexico in 15,000 feet of water, and it's going to be about an $8 billion investment. And I mean, they're going to fire you. It wasn't going to happen. But I think that zeitgeist is changing now. And I think if we are in a plateau of production, and other people that I talk to, I think agree, it's kind of a minority view now, but I think it's going to become, you know, the 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 defining moment will be if we get oil, and oil prices are kind of in the increase right now or going up. But if we get another run up to like, high 80s, low 90s, and if we see a bunch of drilling come back and say, okay, well, they are able to still raise production, but we'll see if they can do it. But you mentioned it. I mean, some water issues out there, produced water, gassier wells. These are all indications of a field that's getting closer to its, peak or rolling over than something that's on the upswing. So, having said that, we are addicted to petroleum, and petroleum demand continues to increase. Notwithstanding people's views on China, you can count on, a percent and a half per year of increased demand. We're up to about 103, 104 million barrels a day. You factor in 6 to 7%, depending who you want to listen to, worldwide depletion. That's 6, 7 million barrels a day plus 1 million barrels of demand. That's a new Saudi you got to find and bring online every year. That's a Herculean effort. And we have not been doing that. We've been living off the fruits of previous work that was done. And so I think that you look at the reserve life indexes of your international oil companies, they've been in decline. People know what reserve life index is. That's the amount of reserves based on production, how many years before they would run out. That's been in decline because of underinvestment. So I think you're starting to see, like, I'm a big fan of a company like Total Energy, the French major. They have created a very smart way of thinking about this. They're a total energy company with a trading arm and this networking effect, and they're starting to make these investments. I think they realize, if you want, they buy gas turbines here in Texas, they'll sell you batteries for your solar farm. They have a trading floor that they'll trade the energy for you. I think that's kind of the model of the kind of company that I'm looking for going forward in the energy market. But when you talk about, I think you're going to see an upswing in uh, uh, offshore production. Because why? Go back and try to look at, somebody had a chart. I don't have it, but go back 20 years ago of how how many companies were operating in this industry. I'm not just talking about drilling companies. I'm talking about service companies, all kinds of other companies that do all kinds of work. And there was a lot of companies, and now it's basically atrophied. And if we do see an upswing in activity, which we are in a bull market, there's just been like a year kind of, because everybody's focused on day rates for 7Gs and stuff like that and drill ships. So nothing's happening, but actually things are happening. So I think, if you look at other companies, look at Technip FMC. I mean, their stock is making, they're they have so much cash coming in and so many new orders. Saipem's another one. I mean, these, it's a turn more of a turnaround. I
Yeah.
mean, these things are gushing cash. Their business, they're getting FIDs left and right. And so I think you can't just focus on, well, should I buy rig or Valaris? There's other things going on offshore besides that. But I think you're going to see ever increasing amount of drilling. And I think, some of the majors, like I said, Total kind of impresses me how they're approaching things. And they're a big offshore player. I think, things are really happening. It's very possible offshore Namibia, that Orange Basin could be another Guyana 2.0. And so we'll have to see how that develops. But yeah, I'm kind of bullish on that. I'm not so much bullish on onshore, although there are some, unique little things that I don't really want to, I mean, 10 or 15 just because in Canada, but I don't want to mention them because they're penny dreadfuls and I don't want to be held responsible for somebody. But there's always an opportunity. But I think this whole shale thing kind of spoiled people, but I think that's another market that I think the perception is wrong, both on the demand side and on the supply side. We're not going to run out of oil. I mean, it's an economic thing. If the price goes high enough, substitution will pick up, and other things. But I'm not a Malthusian, but I think that I kind of like what one geologist said. The days of maybe the $50 oil are over. Now you're into the 67. You start ratcheting up. But then your job as an investor is, can I find that company that still has those assets that can be produced at those lower levels? Going back to Ecopetrol, just to finish my thought on this whole thing, uh, the, there's not, they haven't spent a lot of money on exploration. The government kind of, it is a nationalized company. They just found with Petrobras a huge gas field
They did
offshore
increase the
Colombia,
reserves. Yeah.
and they haven't even scratched the surface. So there's probably more to come on that. So, this is why you have to get in and do your homework. You can't just say, well, I'll just buy the XLE because I think oil's going up. Oh, okay, well, that's like kind of buying a bond or something. I think there's opportunity if you're willing to get in there and do your homework. I mean, there's several that I can think off the top of my head, mid caps. I'll throw one out there right now. A company that a lot of people hated that slowly turned itself around since Elliott got in there. Suncor has turned around. It's a totally different company now since that new management came in.
Plenty of
And
catalysts with the changing
yeah,
political environment in Canada.
exactly. That's exactly right. And a lot of these companies, some mid caps and stuff, they spent the last several years paying all their debt down. I have one company in the portfolio that the management said, when we get our debt down to X level, we're going to devote 100% of free cash flow to shareholder return. And they got it down, paid off a lot of debt. I mean, a lot of debt. And then, started increasing the dividend, the share buyback. So, that's the kind of company, total share return to look for. And just depending on how far you want to go off onto the risks, on the uh, how risky you want to get. But I think there's
If
tremendous
it's the company
opportunity.
that I'm thinking of, I think it's a pretty safe bet.
Yeah, this is a SAGD oil sands company. I think you might know what it is. Yeah. So, anyways, I mean, I've owned that company since when it was like during the COVID. I was like it's $3. I mean, I bought Athabasca at like 25 cents, and the play was like, okay, if this thing if oil prices don't get above 60, this thing goes out of bankrupt. It goes bankrupt. If it gets above 60, then they could probably service their debt. That was the bet. So you load up, and then I don't know what's it. I don't own it anymore. It's probably a $7 stock now from a quarter. During COVID. So these things do exist, and I think you just have to be uh, doing some homework and kind of look around and uncover some rocks if you're interested in that.
Yeah, tying up the theme, you mentioned something that will be the perfect segue into my next theme, but people are saying, oh, we can drill, baby, drill. Well, we've been there before, as you mentioned. Shale was a miracle. It was the equivalent of two Saudi Arabias and two Goatas coming onto the global markets that all the tier one acreage has been well and truly drilled now. So it's not going to be as easy or not going to be economic at these oil prices. The Gorosan article you mentioned, if I remember correctly, the rig count quadrupled over that time, and production did not increase. And I think that it's going to be a remarkable next 5 to 10 years. And if history may rhyme, it may also repeat in that aspect. And so the onshore capex, there are a few ways to play. If the rig count were to quadruple, just hypothetically speaking, your ProFracs and NorAm drilling and some other guys I mentioned should do reasonably well. You would then start to say, okay, well, where is the next cheapest break even? And it's offshore. Offshore has been through a consolidation cycle that you mentioned. You've got roughly 50% of these projects reportedly break even $30 to $35. We just are running out of options. And there are those more direct plays, and then there are some indirect plays, which leads into our next theme, the land upon which these things will be drilled. So if you have to have a quadrupling of your rig count, well, that increases production, increases lease holdings for the likes of Viper Energy and Texas Pacific Landbridge, my two highest conviction stocks. You mentioned the water. The water, I think, is the least appreciated problem in this industry to date. And I'd be really, really interested to get your take on this. For people that aren't familiar, every time you need sourced water to basically throw it at rock, frack it, and oil comes up. However, it's not just oil that comes up. You get this produced water, and roughly for every barrel that's produced, you get maybe 3 to 5 barrels of this horrible, toxic, salty water. And that's a problem. You got to do something with it. Are you playing this particular theme? Because it's actually forefront in my mind. RS, Landbridge, Waterbridge, which is hopefully having an IPO next year, Texas Pacific. How do you see that side of things as a lower risk way to simply capture the activity where all the capex is going to be spent?
Well, I'm going to have to defer to one of your previous interviews, and I think a gentleman in an organization that we both probably are familiar with and respect. I have become, in the last few years, a big fan of Murray Stahl at Horizon Kinetics, and one of his key holdings, which he described, I think. Is Texas Pacific Land. And I think he said many times it's probably one of the best, probably the best company in the world is how he said it. But um, your view on the water is very interesting. Again, it's another one of these polarizing type things because you hear these things about these earthquakes and land movements. I think another acquaintance of mine, Steve Barton, he interviewed Christine Guerrero about. They went on for like 2 hours about this, and I'm not enough of a geologist to understand, but I do know enough about oil production, having messed around with oil and gas. Messing around with some smaller wells and stuff. Here where I live in South Texas, we have some wells and stuff, and it's not a problem to dispose of these saltwater disposal wells like you were mentioning. Out in the Permian, it's becoming more of a problem. And I think even as, if I understand it correctly, like even in New Mexico, the laws are a little bit different than they are in Texas. And so that presents an opportunity. And so you have these companies like TPL kind of fell into it because it was just in this. I don't want to get into the history of TPL. People, it's a very interesting
Pretty
story.
unique, yeah.
Yeah. And I would encourage people to go, look up the name Murray Stahl and go from there. That's about breadcrumbs I'll leave for you. If you want to know about TPL. But I'm very intrigued, like with this whole situation with the company like Landbridge and the management. I've owned the stock pretty much since it went public myself. I kind of am very interested in it, and but you know, I'm not sure because I'm not a geologist. I'd like to hear some different opinions, like what people, but evidently it's become a problem. And somebody even said, well, they can just recycle the water and reuse it, but then people don't understand the turbidity of the water and the constituents of that produced water. I mean, even if you did have like evaporative pond, you're not going to do it with like, an RO units out there. So I've done water treatment in refineries and stuff. It's very expensive. But I can't even imagine messing around with this stuff with all the heavy metals. And, somebody said that based on so many hundreds of thousands or millions of gallons, how many solids you would have left behind, it would become a problem. And it is a problem because what they normally do is just pump these things, pump the water, produced water back down into the earth, into these saltwater disposal wells. So that's becoming a problem. But I think that the thing that I like most about, I don't know if you want to segue into that. I think the main thing of what I became interested in was the whole potential for these in West Texas of the whole Exocenter and the large
Large language model
data
training.
centers and stuff. Yeah, for AI,
Essentially next on my
because
list.
Yeah, I mean, this is what really interests me the most because as Murray has said, or Mr. Stahl, I should say, you can't really build these things outside in Alexandria, Virginia, because you're talking about like millions of square feet now. You can't build upwards because the devices that are so hot now they can't even be air cooled. They have to be water cooled, and so the weight of the water and some of the other things. So you have to have these large areas now, and plus people don't want these things around them. I've read many complaints and a couple forums where just the fans and stuff. They're noisy. They can be noisy for local people. And then the water requirements that you do need. So you need three things for these things going forward. The way I understand it, you need water, you need a place that's kind of isolated, and you need energy. And although I'm a big fan of one of the things I do know about is nuclear power and utility gas-fired power. You have this, as you mentioned, as the oil starts to peak a little bit in the Permian, you have more gas, so much gas that you can't get rid of it all. A lot of flaring goes on, and there's not enough pipeline takeaway. So you have cheap gas, so you could throw up natural gas cogeneration units to power these things. You have land where nobody's out there and doesn't care what you do, and you have water. And as somebody said, maybe it was Stahl or somebody else, it's easier to move bits of information than it is to move, this gas and water.
Yeah.
So I think that that's a real opportunity. This is the problem, though. There's people on both sides of this argument. It's like, okay, you can make the case for this as a theme, but then other people saying, well, it's not going to work because of this, this, and this. But I don't know how you're just going to build the size of these facilities now. I don't think people understand how big these things are and are going to become. They're going to become a problem where you just aren't going to be able to build them around. First of all, real estate's going to be too valuable, and I mean, you're talking about thousands of acres being involved here. That's the scale of where this is possibly going. And so you even have people in Alberta talking about doing this type of thing. So I think that that's where an opportunity is. I will say, like TPL, for example, you talked about water. If I'm not mistaken, you can correct me if I'm wrong, because I know you know about TPL too. I think they had like almost $100 million in cash flow just from water fees across
Easements.
their.
Yeah. Yeah.
Yeah. I mean, people are it's not just they just sit back and clip coupons in their office for oil and gas royalties. I think that management finally got switched on to what's going on. Somebody clued them in. And so, yeah, I think that that's kind of what I'm really interested in with these companies. And I think that especially with the newer company, the management is really switched on. I mean, they're going to maximize, like even down to the caliche pits on their land. I mean, they're going to wring as much out of this until they can get this, uh, hopefully these data centers going. And what does that mean then, down the line, I mean, you're just talking about a tremendous opportunity. So that's kind of what I'm interested in there. I don't know enough about all these produced water things. I want to hear more about this. I'd like to get like some other person that's on the other side from what Christine Guerrero says, and kind of have like a debate and say, like, do we really have this produced water issue, or can they just, I mean, you do have like 5 on the Richter scale earthquakes out there. It's not an
The
earthquake
seismic
zone. It's because
activity
of the
is
water. Yeah.
significant. Yeah.
Yeah.
And
And
I
this is Texas, and I know the Railroad Commission isn't going to shut down oil production, but at some point it can become a problem. You know what I mean? So,
Absolutely. And separate and apart from that, I think that 40% of the energy consumption of these data centers, as I understand it, is from the cooling, and you need the water for that. And I think if we look at the produced water, the price, the fees, the tariffs for handling that produced water, they are growing at an exponential rate, nearly 30% CAGR, according to my calculations. And so that's certainly telling me that there is a basically inelastic demand to process this type of thing. And you are correct, Texas does have the laws and waterways of the United States. I believe it goes back to the Texas Constitution, when Texas was its own kind of thing. And that's why you can do things with water on your land in Texas that you cannot do in New Mexico. And so this is why I think David Capobianco has done an ingenious job of the way that he has structured his land acquisitions. And I think Alberta makes a great place for these data centers but they don't have the same type of legislation that would allow them to do what they need to do with the water. So it's all going to be very interesting. Nuclear, we see, I think it was Microsoft bought out the old nuclear power plant that they're going to use for their data centers. But I still think you run into some problems, the cooling, and the amount of time that it would take being such a politically charged energy source of nuclear power. I have no doubt that eventually nuclear power will play a huge role in all of this, but people are not going to wait decades for their AI. I mean, this thing is here. Final few comments. According to my records here, water volume alone for Texas Pacific, 140 mil last year, and according to my calcs, we'll be nudging 180 this year um, for the sales, and then 120 just for the produced water royalties alone, uh, growing at a very nice rate. Nat gas. Final theme for me that well, no, sorry, apart from monetary debasement, but I think everyone's pretty all over that. Nat gas in the US has just been this anomaly. Are you involved in that in terms of this arbitrage converging with global pricing? And if so, how do you like to express that theme?
Well, I mean, that's interesting. I don't really play around with natural gas too much because I've never been successful trading it. It's just kind of a widow maker.
Yeah.
But I think there's another risk here and something that people should take a look at. You're exactly right. The price relative to the price in the rest of the world is an arbitrage play. And so you are seeing now, I forget the number of export facilities. Well, the one's being built right here in Brownsville, LNG is being built. So we have this, I think it's probably going to get close to where everybody's done. We're going to be close to 20 billion cubic feet a day exporting from the US. But if you go back and read Go Rosen, natural gas is struggling in the Marcellus and things like that too. Now, is this a manifestation of just low prices? And again, if gas goes to $4, $5, $6, then they'll throw enough rigs at it. And John and Adam Rosenzweig and some other people were wrong and we just didn't get it. Or are we starting to peak there also? And we're creating a situation where we're bringing on this increased demand. It's obvious these data centers are going to have to go to cogeneration. They don't run on renewables. Forget about it. If anybody brings that up, you just don't know anything about how things work. And you're right. The pathway to nuclear is in decades, not in a couple of years. I can put a cogen up if I can get it permitted. Or I can do like Elon Musk did in Memphis. I can just bring in trailer mounted aeroderivatives, which are, and just stack them if I want, how many megawatts I need, and
Okay, so
hook the
explain
gas
that to
up.
me because you're a smart engineering guy. Explain that concept. I'm not familiar with it.
So if you look at like gas turbine technology, you have what they're called like heavy gas turbines, and they're like, 100, 150, 200 megawatt machines. Okay. And then what you have is what's called smaller machines. They're called aeroderivatives. They're based more on like a jet engine technology. So there's maybe the size of a jet engine, and they can mount these in like a tractor trailer. So you can put like 10 megawatt machines in there, or maybe
Wow.
even bigger. And say you need 50 megawatts, you can get 5 trailers. You can, if you have a power source, whether it's fuel oil, they can run fuel oil, different or gas, and you can just stack these things and be turning them on. I mean, there's power barges. I know a company that has these things on barges. They'll tow it to some place like Guatemala or some place that has a disaster. You run the cables to the substation, turn it on, you're good to go. So that's what Musk basically did and he kind of just flouted the rules. I mean, he didn't really like go through a big permitting process, from what I understand. I think he torqued some people about it, but he just said, I got to get this data center going, so I don't have time to screw around. And so they just brought in a bunch of skid mounted equipment, set it, turn it on. I mean, you got smart guys that can do that, and you can scale it up. You just keep plug and playing. And so yeah, that might be an opportunity also. People do the same thing with like you could do it with some diesel generator, like gas generators. You can run them on gas. So people, I don't think, aren't really familiar with the technology, but consider this: if you're going to increase the amount of export, and then we're going to start adding all of this demand. I don't know what the CAGR is for natural gas demand. That's, I think, electricity demand. I mean, I even saw that they're going to have to surreptitiously, it wasn't one of the major data players, but it was another data player that was trying to do it on the sly, trying to make a deal with a coal plant in Indiana, and they just wanted to be able to do it without publicizing it because, oh man, we're trying to get rid of coal. So
Yeah.
if they want to expand this and have this go where they need it to go, that's going to be the limiting factor. And this could become a populist issue if gas goes, to your point, if you close the arbitrage,
Mm.
have a price convergence and it converges, let's say at, I don't know where it ends up. I mean, what's gas in Europe today? I mean, if you look at the last time I looked, it was like equivalent of like $46 a megawatt or whatever. But anyways, say you end up at 8 or 9, $8 an MCF when people were used to 2 or 3.
Yeah.
Now you're burning this in a cogeneration plant. I mean, to make electricity for a data center, you've raised all people's retail rates. That's one of the reasons that one of those deals fell through with one of those nuke plants because the regulatory agency was like, this is going to raise rates and so you could turn into a populist issue that may limit this. So I think what I'm getting to is these people are all entrepreneurs, and then that will open up, more creative ideas on how to do this, and which will create opportunity for people and maybe even new companies. So, you know, I think, yeah, people have talked about we're going to build all these LNG. We have a never-ending supply of natural gas, and what happens when the prices converge? That's what you're going to arbitrage the price away eventually. And then what about all this stuff we're trying to do here, where we need these cogeneration plants to run for 15, 20, 25 years till we can bridge to nuclear? Well, I don't hear a lot of discussion around that. So I think that that is another thing people should be thinking about, because that could be I mean, it could turn into a populist issue. I mean, people don't want to pay. We pay cheap down here in Texas, but other places like California, I mean, the power prices determine everything. Look at Germany. I mean, basically single-handedly wrecked their industrial economy because they turned off the cheap pipeline gas from Germany. Now they're buying LNG, which, if you can believe it, some of the LNG that they get is actually Russian LNG. But
It's
so
crazy.
I think these things do create opportunity. Again, kind of like Doug Casey said, he's kind of another hero of mine. He talked about what a speculator is, and a speculator is someone that looks at a situation and sees basically, everybody's on one side of the canoe. I need to get on the other side. Or what Soros said, find the premise that is false and then bet against it. And so I think if you're able to do that, there's going to be a lot of opportunity, because I think a lot of things are happening. I mean, these people are not going to stop, these tech companies. They're going to do this. They have to do it. And the amount of investment needs to happen, I don't think people are really aware of. And the energy needs are. Robert Bryce is good at about this on Substack. He writes about energy and a lot of these things in a very witty way. I suggest people look at his stuff. He's got really good charts too. So, um, you know, this could be a problem down the line, but problems always create opportunity, right? So, I think if you're aware and switched on and paying attention, you just got to pivot when it's time to pivot. You just can't get what, just don't buy the XLE if you're interested in energy. If you put some time in, I think you can do pretty well.
Yeah, indeed. Just because an investment is situated in the right sector, business models make a huge, huge difference. And one thing that's interesting to me is a company such as New Fortress Energy that arbitrages and has a $7 per MMBTU arbitrage locked in with government contracts for very, very long periods of time. I think that Wes, although management's had some issues over the last few years, I think Wes was so prescient in where he saw this thing going. So it's certainly an interesting way to lock in an arbitrage because, as you mentioned, natural gas in and of itself is definitely a widowmaker. In closing, yesterday I posted a chart tracking the Aussie dollar or the Pacific peso, as I refer to it, versus the S&P 500. And it was just amazing. Over the last 5 years, you could have just taken your savings as an Aussie, bought gold, and you would have slightly outperformed the S&P without any of the concentration risks or any of the volatility of the S&P. And as I look today, I wake up uh, rolling 12 months. Gold is up against the Aussie dollar 45.02%. And people here are asleep at the wheel. Since 2020, I've been advising people to, you know, take some of their savings and put it into gold. I've been gifting at Christmas time gold coins and silver coins to people. and still no one is paying attention. Let's talk gold under the theme of monetary debasement. How do you like to play it? I like to play with the royalties and the physical. Maybe you're a little more adventurous than I. I'd like to get your thoughts on the new regime, the new monetary regime that's coming.
So I was fortunate or cursed, depending on how you want to look at it, that my dad was a gold bug. He was one of the original gold bugs. So I remember I was around I was a preteen, maybe 12, when the 79, 80, something around there, and when they had the running gold and silver, when the Hunt brothers, and I remember schlepping junk silver bags down Marquette Avenue in downtown Minneapolis. And my dad, he was had a big smile on his face, you know. And so I've kind of been a hard money guy. Um, I've been fortunate. I think one of the things that I encourage people to do, and I've been fortunate just in my travels, been to a lot of different countries, and I've seen what monetary debasement can do. Um, I I think everybody should order. I think you can even get a PDF of it now. People should read two books to realize what monetary debasement can do. When Money Dies, which chronicles the Weimar hyperinflation, but it doesn't do it from an academic. It does it more in vignettes about certain people and what things were going on during that time. I remember it talks about a widow. She was married to a lower level aristocrat, and he died. He left her a pretty good retirement endowment, and she had a Swiss banker. And he used to tell her, "Look, you have to get out of the German mark. You have to get rid of these life insurance policies, these German bonds. They're going to inflate this currency away." And she didn't do it, and she lost everything because as they inflated, we all know what happened. Then we all know also what that inevitably led to. It leads to political extremism because people if you don't haven't I've been fortunate. My wife lived through two hyperinflations, and so I understood, listening to stories. I mean, when the Soviet Union collapsed, and then when she was in Ukraine and they had another hyperinflation that wiped people out. But where there's a will, there's a way. People still were able to accumulate wealth. And how did they do it? They were able to get some type of hard assets and preserve their wealth. People instinctively, like a squirrel knows to gather nuts. I mean, a human being should have some instinctual to kind of store up. And so, I'm not going to get into my too much into because some of this is almost spiritual, but I go back to what Ray Dalio says. I get accused of you don't ever come up with any original ideas. Well, when you're dealing with these geniuses, you should just like listen to them. They're subject matter experts. I remember it's one of my favorite videos. It's only 3 or 4 minutes. People should look it up. It's him sitting there. I think it was with the Council of Foreign Relations, and the interviewer and all the pointy shoes were listening to him because he's Ray Dalio, right? But he seems like a reasonable guy. And she asked him, "Well, what about gold?" And he started talking, and he was like, "Well, gold's a currency. It competes against the yen and the dollar." And then he was beating around the bush because he was running the hedge fund. There, you got to say certain things. She said, "Well, do you own gold?" "Yeah, yeah, I own gold. About 15% of in gold. I own it." And everybody started like you heard gasps, and then people were like chuckling. He said, "Well, this is the punchline. If you don't own gold," and he's talking about bullion. You don't understand history or economics. And I don't see, I'm not a Peter Schiff or a doom and gloomer, but I do see the handwriting on the wall, and I do see that through the history of man is one that, we were endowed with this certain minerals, call it gold, which is the perfect money. If you want to look at the Aristotle definition of money, I'm not going to get into it's a whole history lesson, but it meets all those needs. And yet, what we have done is because uh, politics gets itself into these things, we continue to have these 100% certainty failing experiments in fiat currencies. And so, the United States, for example, this kind of segues a little bit into, what we were talking about earlier. One of the arrows for Mr. Trump and his administration is, they're going to lower the deficits to 3% of GDP, the Doge committee. This is all fantasy. You have now baked in deficits that are going to be in the trillions of dollars. This is without a recession. The CBO says we're going to have a $1.8 trillion deficit this year, and we have a 3% uh, growth rate. I mean, what are we talking about here? And so you're not going to cut. This is not an environment where you can do a Malay type cutting of the government. It's not going to happen. And so that's on top of the $36 trillion. And so we know that this will continue to go on, as Ben Stein's father said, till it can't go on any longer. And then there'll be consequences. And I tell people, just because something's certain doesn't mean it's imminent. But the problem with these monetary crises, which will eventually happen, is that you don't know when it's going to happen. You leave work at 4 o'clock in the afternoon and you go to the ATM and it doesn't work, and the government has just issued a decree that all the banks are closed, like they did in Greece and many examples, and then you're screwed. Or Cyprus, where they do a bank in, where if you have assets over a certain threshold, they take your assets because people don't understand when they're have money deposited in the banking system, they own those assets. You don't. And so you have to protect yourself because it's like an insurance policy. You don't know when you're going to die. You don't know if you're going to have a fire. You don't want to have a fire in your home. You don't want to have a heart attack, but it's imprudent not to plan for those extremes with some level. And I think precious metals allow you to do that. I think maybe even Bitcoin to a certain extent may allow you to do that. Um, and I think that that should be a core holding of your savings. That should be your savings. You should save in those metals because the debasement is now in the Western world. They're all into the same problem now. They have made a lot of the post World War II liberal neoliberal world order is coming apart, and the welfare state's coming apart, and all these promises that were made, they simply can't be paid for. They're not manifestations of my imagination or because I'm a negative person. They're math problems, and they're going to deal with it. There's three ways to deal with this. You can either cut the budget and live within your means. That's not politically possible. It's not going to happen. It has to happen anywhere in history. You can just do an outright default. That won't happen either because we wouldn't be
Yeah, with
the
the reserve
the
with the reserve
hegemon
currency,
anymore.
it's not on the
Yeah.
table.
And so what are they going to do? You're on a 4 and 2 year election cycle. Again, go back to what Munger said. Show me the incentives and I'll tell you the outcome. How is Alexandria Ocasio-Cortez or Thomas Massey, who are on 2 year election cycles, they don't care about, neither one of them cares about the deficit. Okay? Because if they did and it can do math, they wouldn't want to be part of the House of Representatives. You're not incentivized. That's a problem that's going to be somebody else's problem 10, 20, 30 years down the road is how those people think. And so the things that need to be done to fix this are not politically possible, and the things that are politically possible won't get the job done. So you only end up where you always end up in currency debasement because it's the easy way out. And it's almost, I don't want to sound too sleazy here or offend anyone, but you know, the check is in the mail. I'll only stick the tip in. I mean, come on. Once you start down this road, historically, you won't get off it. You just get deeper and deeper. And so I think, owning gold as a foundation of your wealth to whatever you're comfortable with. And now I'm not talking about an ETF or Perth shares. I'm talking about Krugerrands or Maple Leafs in your possession. That's what I'm talking about. And then you can branch off that based on your risk profile. Royalty companies are very good. You have to pay attention to them, and you can sometimes buy them at discounts from they tend to get overvalued because everybody knows that royalty companies are very high return on equity, and this is not a secret. So that's a good way to do it. And then, if you want to screw around and if you're inclined, you want to play around and speculate in some mining shares, but you don't have to do that. You can buy top mining share companies right now, Agnico Eagle, Anglo Gold, um, I can't even Alamo. I
Yeah,
mean, these
Barrick
are
stuff.
good companies. Yeah. So, and they're selling based on their previous, historical norms based on cash flow. I mean, there's no reason to mess around with Saskatchewan Moose Pasture Gold Company. So I think there's opportunity there. To your point, it's not just the Aussie dollar. I mean, Ronnie Steufel's company, his outfit, Incrementum, they publish that monthly gold thing and they show all the major currencies.
It's
Gold
really
has
good.
outperformed every currency in the developed world, and forget about the emerging markets. It's crushed it. So you've actually, even here, would have done better buying gold than the S&P. So I think that should be telling people something. Something's happening, something's going on. And so, yeah, I'm definitely bullish on gold. I'm not a gold like perpetual, but we're in an environment now, I think, where um, You have to look at, and this is the problem. Just because you can't see it, well, on Monday, are we going to have a currency crisis? No. I mean, I don't know when it's going to happen. A year from now, 2 years. They have to roll basically $8 trillion worth of debt this year. How are they going to do that without pushing rates up? And what does that mean then? I mean, there's a whole bunch of landmines out there, and so you don't want to be trying to call up JM Bullion in the middle of a crisis trying to buy your gold then. I guess that's my point. You should just be accumulating it over time, what you're comfortable with as an insurance policy. And with the idea, this is my savings, this is my rock, this is my fortress of, you know, I can't give a Perth Mint certificate to a border guard. I mean, I have a history in my family. People came from places where that people had to do things like that to get, and you might be able to do it with a silver coin or a gold coin that may save your entire family's life. I mean, look at the czar's family. I mean, when they first shot them in the basement, the girls weren't killed immediately because they had so many jewels and things woven into their hard assets, woven into their garments. They so, I mean, I'm not trying to be, I'm just pointing out a fact. So this
No,
is
graphic, but it's
historical.
it's
Yeah,
illustrative
yeah.
of this is not the first rodeo for this type of thing. Uh,
And I'm not, yeah, I don't want to come off as doom and gloom, but I think it is an opportunity just from a wealth basis, but also for uh, capital appreciation at this stage in, you know, where we're at. I think gold stocks have tremendously underperformed the gold price. I mean, there's a big opportunity there.
yeah, indeed. And is there a particular tier of gold producers that you like? I know my friend Don Durrett on Twitter thinks I'm crazy for not owning some of the Aussie juniors. I'm good. I'm set up. I don't need to lose sleep over that sort of stuff. I have my royalties. I have my bullion. But I have a little bit of Equinox, but that's a separate story. Otherwise, each to their own. How do you like to play these things?
I just like, I own like ma larger companies. I think I mentioned some of them. I own those. Why do I need brain damage messing around in the Canadian Venture Exchange or Aussie stock? I mean, look, man, let's be honest and steal Doug Casey's thunder. Mining is a crappy, it's the worst business. It's a net destroyer of capital, except for certain periods of time when things set up. And so why do I want to screw around? I mean, I say this on every interview. If people are interested, a thing that will dissuade you from junior resource stocks is to go to one of these mining conferences in Vancouver, and you'll meet Rick. You can talk to Rick Rule. He's a billionaire. He'll talk to you. I'm not bagging on him, but you'll see a lot of great presentations. They'll have Brent Johnson there. They'll have everybody that you hear on these interviews will be there, and you can talk to them. You can eat dinner with them. You can do whatever. Go drinking with them. I've done it. So that's the fun part. Then go into the hall, the exhibitors hall, where they have all the mining companies, and every one of them, you'll walk out of there with a stack of literature, and your head will be swimming with visions of sugar plums, and you're going
And
to
they're
realize
all
real
trading at massive discounts to NAV, all of them.
absolutely, absolutely. And are you an accredited investor? Because we have a private placement coming up. So, I mean, so I think that's about all I need to say about junior mining. It's a good way to lose money very quickly if you don't know what you're doing. If you want to be a player in that, what you should do is go to these conferences, meet these people, make sure that they understand you're an accredited investor, you're a player, and then you need to be involved in the private placements at the opportune time. When Rick is sitting at the table with these companies, when they need money, he can extract the warrant, and you're riding along on his coattails because he puts funds together and does that, or Marin Katusa, these type of guys. That's the guys that make the big money in junior mining, not retail investors that are just punting on a hope and a dream. That's my own personal opinion. And from my own experience, learned experience, that's me.
Yeah, those guys I term the exit liquidity. So yeah, that's my possibly a little harsh but not inaccurate label for that crowd. Guys, just leave that sort of stuff to Doug and Uncle Rick, and go back and look at the performance of Wheaton Franco versus the GLD over 10 years, 20 years, and even the bullion itself. And I think that will be quite instructive. Mr. Palomni, thank you very much for joining me today. I had a ball. Is there anything you'd like to leave us with before we wrap up today's episode?
No, we covered a lot of ground. I really enjoyed this. This was really fun. So I appreciate you having me on, and hopefully we'll talk again.
Absolutely, guys. Check out the links to all of John's informational services below. Thank you very much for watching and look after yourselves, guys. Do your own due diligence, and I'll be back with another episode of the ROI podcast shortly. Take care.